So FBT overview, Jasmine will talk through that. I'm going to talk about what's new in 2001 and also about those COVID-19. Anybody remember COVID? Yeah, the concessions that are available on FBT. I'll talk about that as well. Then I'll hand it over to Jasmine and she'll wrap it up on the employee travelling, accommodation and meals, and also what the ATO is focusing on. And we'll have questions and answers, and both Jasmine and I will dip in there. Over to you, Jazzy. Got to give her my mouse. It's very sophisticated, all this. I love this.
Thank you, Mariana. Good morning, everyone. So I'm just going to run through the FBT overview. So first things first, let's talk about the dates. The FBT that we're looking at today is from 1 April 2020 to 31 March 2021. It's just finished last week. And the first thing really is due dates. There's two options here. So either you're lodging your returns through a tax agent like HLB, or you're doing it yourself. Now, if you're doing it yourself, you need to lodge and make payment by the 21st of May. If you are going to go through a tax agent, there is a lodgement extension concession that is available. And in that case, the return is due for lodgement on the 25th of June. And another win that we have this year, previously, even if you were lodging through a tax agent, you'd have to pay by 28th of May. But the ATO allowed us from this year onwards to make payment also by the 25th of June, which is a big win, I think. And a lot of tax practitioners have been trying to push the ATO to do this. And just one thing to note, if you do want to access the extended due date, which is provided to tax agents, you need to make sure that you get on the tax agent's list by the 21st of May. Moving forward, FBT rates. So these are unchanged from previous years. So FBT is still levied at 47% and the gross up rates remain the same, being 2.0802 for type 1 benefits. So those are your benefits where you are entitled to claim a GST credit for the expense, and type 2 benefits being grossed up at 1.8868. And just another thing to note, if you do have any reportable fringe benefits, so for those of you that aren't aware, those are where you're providing grossed up benefits of more than $2,000 to an individual employee, you do need to report that. Previously, it was in their payment summary. Now you'll need to do it through single touch payroll. And when we report these, we do need to gross them up using the type 2 rate, 1.8868. So that was a quick summary of the dates and the FBT rates. Now moving on to not-for-profit entities. Now some of you might be aware that certain not-for-profit entities are exempt from income tax, and tying into this, they do have access to FBT exemptions. Now, if we have a little think about it, non-for-profit entities aren't always able to pay market salaries to their employees. And so in a way, the ATO allows them to provide benefits exempt from FBT, so they can provide benefits to their employees in a way and not cost too much for them as a not-for-profit entity. So the two different ones we're looking at here is public benevolent institutions and health promotion charities. And what they can basically do is provide values to each employee, fringe benefits to each employee up to a grossed up value of $30,000, and that will be taxed FBT exempt. Now, grossed up, well, what does that really mean? Well, I think what we're more concerned with is if you're providing type 1 benefits of more than $14,421, it won't be exempt anymore. And if it's type 2, up to $15,899, and these will be capped and be exempted from FBT. Similar to this, hospitals and public ambulance services are also capped at a grossed up value of $17,000, which again, grossed up value doesn't make too much sense to us, but type 1, $8,172, and type 2 expenses of $9,000. Hospitals and public ambulance services can provide to their employees exempt from FBT. There is an additional cap for if not-for-profits are exempt for FBT. So given that they fall into one of the categories we've already discussed, they're able to provide their employees with salary packaged meal entertainment valued up to either $2,400 or $2,600. And these are things like your meal cards, which a lot of not-for-profits do choose to provide their employees. Moving on to documentation and declarations. Now, this is an important one because in the last few years, there hasn't been much audit activity in the FBT space, and these are the kind of things that they would really look at. And we will touch on this briefly later on in the presentation, but it's very, very important that you've got your declarations signed by your employees and you keep these on file. So this might be, you know, there's some declarations that we've listed here, but I just want to stress that that's not an exhaustive list. So, you know, whether it's your expense payment declarations, no private use declarations, living away from home declarations, you know, loan fringe benefits, again, just a small list. There are a lot more. And the ATO does have a list on their website of all different types of declarations that might be required. We can also provide you with copies of these. So yeah, that's definitely something to keep in mind. Other documentation, if you are providing cards to your employees and you know you're using the operating cost method and they've got logbooks, well, first of all, you need to make sure you have a logbook for each car that you've provided, and you need to make sure that these logbooks are up to date. And you don't necessarily need to do it every year, but if there has been a change, which you know last year was a big change for all of us, so you need to make sure that the logbooks are up to date and relevant. Tying into this, you need to make sure that odometer readings for all cars are also recorded where you're using logbooks. And you know why all of this is important is because there are significant penalties for not lodging FBT or lodging late. So there's two different parts to this. So if you're a significant global entity, or an SGEs as we call them, now you must be thinking, well, what's that? Well, just very briefly, these are entities where the aggregate turnover of the whole group, the global group, is greater than $1 billion. And for these entities, the penalties are significant. And it starts at a minimum of $111,000, even if the return might be lodged up to a day late. And one thing to keep in mind is that your business in Australia might only be turning over 10, 20, 30 million. So you don't think you fall into this, but remember, it's an aggregate. So if you have global related parties where the turnover might be higher than this, you will be subject to much harsher penalties. And other non-SGE entities, they can also be penalized up to $210 to a maximum of $5,250. So that's a little bit of housekeeping on the admin side. Now, one of the most common types of fringe benefits, and one that we usually get the most questions about, is entertainment. So really, entertainment is when you're providing food and drinks or recreation to employees or their associates. And there are three methods usually when we look at entertainment that we talk about. So this can be actual method, 50-50, 12-week register. But the ones that we're going to touch on in more detail are the actual method and the 50-50 method. So one of the questions, just before I get into this, one of the questions that we got in before the webinar, there was one about someone wondering, well, if we're providing an employee with a luxury meal, there's no alcohol included, would we still need to consider it for entertainment? And the answer is yes. Yes, it would still be entertainment even if there is no alcohol. You're providing a meal at a restaurant to an employee. So yes, it would definitely be caught. Now, what we're looking at the moment on the screen is the actual method. So in here, we look at, okay, first of all, who are we providing entertainment to? Is it clients or employees? If it's clients, it's not counted as entertainment for FBT purposes, but you also won't be able to get a tax deduction or claim any GST credits. If you're providing to employees, well, there's some other avenues that then come in. Under this method, each transaction, you're able to review it individually, and only the entertainment provided to employees is subject to FBT. Then there's a whole heap of exemptions, which we haven't listed all of them, but there's a whole heap of exemptions that you may be able to apply. Now, going back to my question, say you're providing that luxury meal to an employee and it's a one-off thing, you know, you haven't provided them any other similar benefits, you might be able to claim what's called the minor benefits exemption, where if you provided benefits less than $300 and they're infrequent, irregular, you're not going to have to pay FBT on them. But just note that these exemptions are only available under this actual method. So if you are able to claim any of the exemptions, there won't be any FBT, but you also won't get your tax deduction and your GST credits. And the other method that we're going to... Sorry, I'm just trying to change my slide. Sorry about that. Thank you, Mariana. So the other method that's quite popular is a 50-50 method. Now, the big difference here is that both employee and client entertainment are grouped and you treat it with only 50% of all of the entertainment as being subject to FBT. And as you can imagine, this means that only 50% of all entertainment would be tax deductible and subject to GST input tax credits. Under this method, you can't use any exemptions to reduce taxable value, like the minor benefits we spoke about. These are only available under the actual method. And one important thing to note is that you must elect to use this method. You need to have a written election on hand for the year to use this method. Now you're wondering, well, what's really the difference? And I think the important point to consider here is, as an employer, are you providing entertainment more to employees or clients? If you're providing it more to your employees, maybe the 50-50 method is more effective for you, because as a whole, you might be providing up to 70% of 80% of all entertainment to your employees. And this reminds me of another question that we got in our webinar, where we had a client who's got a CEO or a manager that goes out for lunch every week or month with a different group of employees. And they wanted to know, well, is it just going to be the CEO that we need to pay entertainment on? Would it be the other employees that would be caught as well? And I think in situations like this, 50-50 is probably the best way forward, because remember, the minor benefits exemption, which many people might be tempted to think, okay, we can bring it in here, but it does talk about things being infrequent and irregular. If you're going out, every month or every week, even every month would be up to 12 times a year, and is that really irregular? So if you're providing if you're providing entertainment more to employers, maybe it is more effective in this case to use the 50-50 method. On the other hand, though, if more of your entertainment is provided to clients, the actual method might be more effective and allow you to reduce your liability significantly by drilling into all the different. Moving on to my next slide. Yeah. So we're just going to look at a few examples of common types of exempt benefits. Now, there is a lot more. There's a whole heap of exempt benefits that are not listed here, and I'm not going to, in the interest of time, go through everything on the slide as well. And I would just like to note that there are some of these that we will revisit later in the presentation. But I think one that gets talked about a lot, and I've already touched on, is the minor benefits exemption. So again, benefits provided to employees that are less than $300 in value and otherwise minor, infrequent, and irregular. This is probably a good one where you provided a small or one-off benefit to an employee. So that's one that is quite popular. Another one, not necessarily an exemption, is the otherwise deductible rule. Now that looks at where you as an employer have covered expenses for employees that would be deductible to them if they paid it themselves. So for example, I work as a tax advisor, and say my employer was to pay my tax institute membership fee or my CA membership fee. Ordinarily, it's a private expenditure that they're covering for me. But if I was to claim that in my personal tax return, I would get a deduction. So it would be otherwise deductible to the business, and they would not need to pay FBT on it. Another one I think that is quite popular and will come up later in the presentation is car parking for small businesses. So small businesses are generally exempt from paying FBT where they provide car parking fringe benefits to their employees. Mariana will go into this in a bit more detail because there have been some changes and there are some other requirements that need to be met. So we will discuss this in a later slide. So I'm just going to pass over to Mariana now, and she'll take you through what's new in 2021.
Thanks, Jasmine. Lovely. Well, I told you she was good, so I hope you enjoy that. You'll hear more from her in a minute. So back to me. Okay, there has been some changes in 2021, but it really applies from 1 April 2021. So not this FBT year that we're doing 31 March 2021, okay, but it is next year. But it's worth knowing about because you're in that FBT year at the moment, currently happening. So there's two changes because of the change in the budget. It was announced that if the aggregated turnover of an entity, so aggregated turnover being world, you know, you look at it, and anyone that controls the entity, you take their turnover. So that's what aggregated means. If no one controls your entity, you just look at the turnover of the entity itself. If it's up to 50 million, you can get some of these exemptions. So it was previously, and it is still 10 million, and it's moving to 50 million from 1 April 2021. So what does that mean? That means that a lot more businesses are going to be able to avail themselves of the FBT exemption for using multiple devices, work-related items. So that means you can provide, you know, your staff member with 2 laptops, 3 laptops, you know, multiple devices, as long as it's still for work purposes. So keep that in mind. Also, the other thing that's been extended is, like Jasmine spoke just a minute ago about the car parking. So car parking previously, and it is still for this year, 10 million, it'll go up to 50 million. So that's quite a great exemption, and you'll hear about that in a minute as to why. So going to the next slide, this probably just summarises for those that just want to see how that works. So currently, if your business turnover for the current FBT year, March 2021, is under the 10 million mark, you do multiple devices, work-related items, you know, that aren't of a similar or are similar, doesn't really make a difference. But going forward from 1 April 2021, you can provide staff with multiple devices if your turnover is under 50 million. And the car parking, the same thing. So car parking in the current year is 10 million. And so long as last year you're, say 2020, so I'm in April 2021, so I'm in my 2022 FBT year. I look at my prior year and I say, did I have have turnover under 50 million? Yes, I probably am entitled to use this concession. So worth knowing. Reason why is, I'll go through that in a minute, is the car parking. So if you recall last year, I mentioned that there was a ruling that came out, this particular ruling, and it was talking about expanding the definition of what a commercial car parking station would be, which meant that a lot more businesses would be caught and effectively would have to pay FBT on car parking, whereas currently they would fall under this current exemption. So, and I mentioned that it was going to be deferred to 1 April 2021. Now, it's deferred to 1 April 2022. So that means business as usual for the moment, and I'll go through what that means. So what's a commercial car parking spot? Well, if you recall, if you do read the legislation, if you're ever interested, you know, it goes through what is a car parking, and it talks about 4 hours. And one of the things it mainly mentions is that there is a commercial parking station within 1 kilometre radius of where your car is parked. So I'm in the city, I've got car parking here. It's not a commercial car parking station, but within 1 kilometre, I have car parking stations. And within that 1 kilometre, some of them, you know, have different fees. Most of the time in the city, I'm going to be caught, right? Unless, what takes me out? One of the things that can take me out, besides small business car parking, is that I look at the commercial car parking spots, or the car parking, if you like, the paid parking around the area, and most of them are designed for short-term shopping and hotel guests. Yes, we have a lot of hotels around the city, but, you know, there's a lot of commercial cars, so that's not going to help me in the city. But somewhere outside of the city, that may help me. So I'm in Liverpool. No, Liverpool won't be the road. So give me a suburb that no one, you know, that it's out there in Woopleland, and there's no commercial car parking stations. Anyway, Mascot. Mascot, there's a good one. So there might not be any commercial car parking stations. There's a lot of airports. There might be a shopping centre, but it's sort of saying that shopping centres, airports and so on weren't considered commercial car parking stations. What is this ruling trying to do then? This ruling is saying that your shopping centres, your hospitals, your hotels, your universities, your airports, your sporting stadiums are all going to be considered commercial car parking spots. From when? From 1 April 2022. So that means it can capture a whole lot more of commercial car parking stations. The definition expands. Previously and currently, for this FBT year and the next, it says that if you have penalty rates imposed, it's not considered commercial car parking station. And this ruling tries to change that. And I'm glad they can't figure it out, so that they keep postponing it. That's a good thing. The other good thing is that from 1 April 2021 is that your FBT exemption, your general exclusion, if you like, is going to change to that 50 million. So again, it's probably going to be less of a problem. So as I was mentioning, if you've got a commercial car parking spot within a 1 kilometre radius that charges all day fees of $9.15. So if the nearest or within 1 kilometre and you had 3 or 4, if any one of those 3 or 4 charges $9.15 or more, you're in these rules, right? If all of those charge less than $9.15, then you're probably not in these rules and you don't have to worry about it. But if you are in these rules, then you can look down here and say, well, do I get a general exclusion? And one of the other things is, is it a commercial car spot? And if it's short-term like a shopping centre, like a Westfield or an airport, probably not. So you're out anyway. And if you don't get out by that, you can get out by the small business car parking exemption. Okay, and that is you can't be yourself a commercial car parking, and your turnover will have, from 1 April 2021, can be under 50 million. For this FBT year that we're doing now, it'll be under 10 million. But the expansion of the commercial car parking has not come in yet. So some would say it already is in, but the fact that you've got a ruling and they keep pushing it out, it's not solid. So we've got an argument. So how do you actually calculate commercial car parking? So one of the things is you determine how many benefits you're being provided. And I just look at this. So you've got the actual method, the 12-week and the statutory method. You choose one of those and you say, which one's best for me? Well, how many car spots am I providing? That's the actual method. The statutory is there's 228 days, so that's the other one you provide. And then your valuation method. And use a commercial car parking station method, an average method, or a market value method. And it's been sort of mentioned that the market valuation method is probably a good method to use. You have to get someone external to do that, and I'll run through that in a minute. So the questions you have to ask yourself, do you provide car parking in the first place? Now, whether they park there or not doesn't matter. If it's salary package and it's included, or you're providing someone, or you've got a premises that has 10 spots and your employees use it, you don't charge them, that's a benefit being provided. Okay, so yep, bang. Then you go, oh yes, I do provide it, or I don't. Stop there, who cares, move on. Or you go to, you provide car parking, and do you fall under the small business exemption, you know, from I would say from April 2022. And that means, has your turnover under 50 million? Now, if I'm looking at the current year at 31 March 2021, I'd say, is my turnover under 10 million? I say, yes, great, bang, I'm out. If I say my turnover is over 10 million, I look at some of the other exemptions. And that is there a commercial car parking in the area? Probably not, so I'm okay. And some of you would already be paying FBT. Now, if I'm looking at it from 1 April 2021, great, and I'm providing car parking and I've got it more than 10 million, I might be getting out of it now. So from that next year, you might not have car parking at all. But what if you are, you don't fall under the exemptions? So what do you have to do? So you don't. So whichever case, so something to consider is using the market valuation method. The market valuation, you'll need an external valuer. I've got a name, as it happens. Very reasonable person, has worked for the ATO before, so, and has, you know, knows the rules. So that is a way of looking at it when you're doing evaluation to get a better price. And also another thing from 1 April 2022, you might need to consider adjusting and reviewing what it is that you are providing to your employees, what remuneration. The other thing would be just to go to a car parking allowance. So give them an allowance. Different treatment, right? When you're providing a benefit for free, there's employees not paying anything. It's not costing anyone any money, except you could be liable as an employer for FBT. If you provide them with an allowance, obviously that's got to be packaged and that's got to be either on top of their salary, got to pay withholding tax, PAYG withholding out of it, but it becomes the employee's problem and not yours. Do you want to give it to them? That's another question. But again, it's really only an issue. It only becomes an issue if you can't get out of one of those exemptions. Now, the other thing that has come out is there's a new class ruling. And I think when I look at this class ruling, it's really out there for those salary packaging providers, but it could be useful for you as well. The only thing is that a class ruling, you have to meet the facts pretty similar to what they've got there. Otherwise, it may not be binding. Now, in a lot of cases where it's a family-run business, as you know, we might have client contributions made. So CEO or, you know, the director owner of the business might be provided with a vehicle. We calculate the operating cost statutory method, and we come up with a value, and then we have a contra, like a contribution at the end of the year, before the end of the year, and they may have a loan account with a company, and we do a journal and we make it all magic and it all goes away. So we don't have an FBT liability. May show it on the FBT return, but effectively there's no liability. But where you may have a lot of employee salary packaging and you use one of these salary packaging providers externally, employees previously may have been making contributions, but any contributions, cash contributions, not expense payments, but cash contributions made after 31 March were not ever counted towards the calculation. So what this class ruling says is that now we can reduce the taxable value so long as the contributions are done before we lodge the FBT return. So 31 March, somebody, you know, it comes out of their pay in April, that can now go against that taxable value for 31 March. So long as it's done before we lodge the FBT return, which is, if you're doing it with an agent, 25th of June. Actually, we shouldn't really tell you about the extension of time because it only delays you providing the information to us, and then we have a mad rush towards the end. So all I say is that maybe try to get your FBT information to us earlier because it just helps us spread out the work. Okay, and then it only applies to employees covered by this ruling. So hence why I say these things are quite specific. But if you want to, and you have a lot of employees, you contribute, you have a lot of vehicles, you could apply for a binding ruling if this is a big concern. This was another interesting one with novated leases, trade-ins and cash contributions. So if you recall, novated leases are, you've got the employer takes on the lease, the employee effectively holds a vehicle, uses the vehicle, and the finance company owns the vehicle. So you've got this three-way arrangement. And there's an agreement, and then effectively the employer pays for the lease payments, and it packages out of your salary package. So what this is saying is it comes right at the beginning of that, and it asks whether novated leases are indeed genuine and can be considered part of cars. So can you get a car fringe benefit? So if they're not genuine leases, if you like, effectively they're not considered be holding a car, the employer is not considered to be holding a car, and then you can't have a car fringe benefit. So this is why that's important. And there's a fact sheet that came out from the ATO. And previously it accepted that, for example, if I had a car that was worth 60,000 and the employer said there's a cap of 40 that will, you know, finance or pay or willing to, you know, salary sacrifice on the vehicle, what some of the employees had done is traded in their vehicle, which has neatly been 20,000, and offset it against that. So the amount that we're talking about is 40 that's been financed. Or another might be that the employee has contributed cash, so it's reduced it. Anyway, they're actually, the tax office has now taken a different view. They've said previously that's fine, the net amount, where I actually consider that's fine. The lease is fine, we consider that still part of car parking, no problems. Now they've done an about face on that and said, no, we consider the full value to be the lease, so it doesn't really fit within the definition of what is a lease, and you don't get a car fringe benefit. And that's devastating, right? Because what does that mean? Those particular vehicles, and you have to look at each contract, you wouldn't have the option of using operating cost or statutory method. You'd have to use something else, which is, you know, a property fringe benefit, residual fringe benefit. So just keep in mind, don't need to know all the detail, but just keep in mind that when you're entering into a novated lease, and there's trade-ins and cash contribution, just maybe ring an alarm bell and have a chat with us, or have a look at the fact sheet that the ATO has brought out on that particular matter. I'm going to hand you, no, I'm not. I'm going to keep talking because I just love talking. I'm going to talk about the COVID-19, and Jasmine was getting very excited there, so sorry about that. COVID-19 concessions. So interestingly enough, COVID hit last year, probably towards the end of March. It probably was here a lot sooner than that, but when we found out about it, it was 2 weeks towards the end of March, and we all got sent home and said work from home. And then the government brought out a rule that UK work from home, the cities closed down, amazing as it is. So, you know, the COVID period would have been, for some, it's all different, right? Depending on where you're at. But April to June was when everything was really shut down. I mean, all the restaurants, that's really what I'm talking about. You know, everything was fully shut down. You couldn't get anything. I was walking around on the Woolloomooloo Wharf and, you know, I was doing my exercise there. There's normally 20,000 restaurants open. So it's just a bizarre feeling, right? So that April to June would have been that solid shutdown period in New South Wales. I think if you look at Victoria and other places, it might have been different. But, you know, July, things started opening up again. But in some cases, it would have been to October where people were still working from home. Or in most of the cases here, in our firm, it was until Australia Day. And then after Australia Day, people started coming back in. So you can see there's a period there where the world was not the same. And that's why these concessions have come about. So what is one of the concessions, which I find this concession a bit useless, but, you know, look, you've got to bear with me because that's FBT for you. But say, you know, employees were working from home, so, you know, you're providing monitors, you know, laptops they probably had, monitor screens, you may have even been providing furniture. And what they're saying here is, we're going to give you a bit of concession here, but usually what happens, and why I say furniture over $300, because anything under that, you'd get some sort of exemption. Either it's a minor benefit, either it's a work-related, if it was a computer or something. If it didn't fit within work-related, it fit under minor. And it might otherwise be deductible. But it couldn't come into this section 47 business premises concession, where it says that if you use stuff on the business premises is exempt. What they've done is they've expanded this definition here. So if you provide a staff member with a piece of furniture that say costs more than $400, it's not otherwise deductible, I don't know, a desk or something, or a chair, ergonomic chair that's beautiful, that's $1,000 or something. And you allow them to use it while COVID is hit, you know, while they take it home, then you can get it under a business, you know, premises exclusion. Now, if you allow them to keep it, it's FBT-able. Now, I don't know how they're going to find that, but I'm just telling you that's what they're saying. So these are some examples for you to sort of have a look through. The easiest thing is to say, you know, have an agreement with employees. If you are providing anything really of value, is say, you know, yep, you can use it over code, but it has to be returned. Now, is everyone ever going to know if it's returned or not? I don't know. Like, you know, is someone going to say that chair's not back, please give it back? But you have to have some evidence that, you know, you put that into play. I don't know if anyone in the audience has this particular example, but anyway, that's out there. Exemption for emergency assistance. So emergency assistance was quite narrow in its definition in FBT, because remember, FBT catches pretty much any benefit being provided. Okay, unless it's salary and wages, unless it's super, unless it's employee shares, specific things are excluded, and there's a whole list. But where you might be providing, say, employees stuck overseas and you've got to bring them back. That may not be work-related bringing them back. It may be, I mean, how do you consider it? But they're saying all these things are exempt. If you have to bring them back, if you're helping an employee move or transport because they're, you know, under COVID, there's a risk. This could be, you know, assisting them. Also, there's a fly in, fly out. You know, they couldn't go and fly anywhere, so they had to stay where they were. So you might have had to be providing them accommodation and food for the period that they normally would have been flying out. Well, this is what this emergency assistance is for. It's quite specific. And there's some examples, detailed examples on the ATO website if you ever need it. What it's saying, okay, it's FBT exempt, you can claim a tax deduction, you can claim the GST. Now, the big thing is that, you know, March came along and, you know, everyone had all these events for staff organised, a Christmas party maybe for December, you have to book a year ahead. And then we had to cancel. And sometimes people weren't going to give you a refund, and it was all for employees. Is there FBT on this? And the answer is no, there's no FBT. Can you get a tax deduction? That's the other question. So if you look at this, relating to cancellation, no FBT, but it's not tax deductible and you don't get the GST credit. Why? Well, anything under the Income Tax Assessment Act, there's a specific section that says if you provide entertainment, which means accommodation, food and drink, transport to an employee, then in certain circumstances you can get a tax deduction, but in most cases not tax deductible. The only time it is ever tax deductible, besides what exclusions, is it's obviously when you're in a conference or something like that, is if you pay FBT. Hence why you don't get tax deduction on GST, but you, in this case, you're not paying FBT when an event is cancelled. But if you provide an employee with a hamper, you know, Christmas time, I think we provided some employees with a hamper. They couldn't get it anyway because it was sitting in their office on their desk. Could be FBT exempt under 300, the threshold, tax deductible. It's not considered entertainment, and you get input tax credits. Yeah, go figure, exactly. Now, I just wanted to bring up this other concession on car parking benefits. I wanted to bring this up again, just so you sort of put it into play with the definitions of what is car parking benefit. And as you know, there's a car park, if there's a commercial car parking station within 1 kilometre radius that's charging all day parking of more than $9.15, you have FBT. As we talked about before, nothing new there. So what this concession is saying that a lot of the parking spots were closed, or they didn't charge a fee for the COVID period, right? So effectively, why do we have to pay FBT for the whole time that we salary packaged or we provided a parking spot to our employees? Because when you provide a parking spot to an employee, it doesn't matter whether they use it or not, it's being provided to them, it's theirs to use. So effectively, you could have an FBT liability there where the city has been closed. There's no commercial car parking spots within 1 kilometre because they're closed, or their rates are reduced, or they've stopped charging. So effectively, and assuming there's no small business concessions or anything like that, what they're saying is that, okay, well, look, we're going to allow you some concession here. So when you're doing the calculation, when you're using the actual method, 12-week and statutory, so that's what they're looking at. You're using the actual method, you exclude the number of days the commercial car parking and it was closed or providing free parking in that area. So if it's, if you think about it, 1 April 2020 to 31 March, there might have been 6 months of that period where the commercial parkings were closed or were for free. If you're using the statutory method, you normally deem 228 days. Well, they can do available days, to take out those days where effectively it was closed, the commercial parking spots, and you can go from there. Now, we were just looking to see, I don't know if our software handles that, so we've got to maybe do that manually. I'm not sure yet, so we'll see that. I haven't determined that yet, but we've got to take that into consideration when we're doing the calculations. I'm sure that the software is smart, but you never know. The other thing it's providing is car benefits. So a lot of us provide cars to employees, right? And the cars are being taken home. Some cars are parked on the business premises, don't worry about those. But, a lot of employees take their cars home, traveling salespeople, whatever it is. Pharmaceutical companies, they would have a lot of staff going out on the field, etc. So they're providing their employees with cars. The cars are usually parked at or near employees' home. Well, there's a concession there because of COVID, but only if you use the operating cost method. So that means that, you have to keep a bit of a logbook. You would have had to keep a logbook or have a logbook, and you can only use the operating cost method. So with the software, it allows you to use both methods, and obviously we'd work out which is the better method. And obviously there's written election, but that's automatically done by the software, so that's all good. If you're not using our software, you do it yourself. During the period, the car was parked at your home or employee. It wasn't driven. We got nowhere to go anyway in that COVID period because you couldn't go out. So you shouldn't have been driving. And it was locked up. Now you could use it just to maintain the car. So you had a whip around the block or something like that just to keep the motor running. So you keep some odometer readings to show that, or effectively you can reduce the period where COVID hit the FBT liability. Now, there can be a $30,000 or more saving if you provide a lot of vehicles to your employees, right? It is fiddly. I'm not going to say it's easy, but what happens is that you reduce the expenses of that period. And when I thought about that, I thought, oh, reducing expenses, so what? I haven't got fuel. I've probably not got repairs and maintenance or anything. But then if you look at your lease payments, or you look at deemed interest and depreciation, they're going to be hacking on every month, boom, 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 boom. So 6 months of not having that is going to reduce your expenses substantially. The other thing you can do is you can use your original logbook percentage. So, you know, if your patterns change, you normally have to keep a new logbook. But due to COVID, they understand that you can't just go invent a logbook and say 0. Look, see, I didn't travel anywhere. No, they won't accept that. But they will accept that your old logbook, or if you want to keep a new one, what is valid. So again, you don't have to change too much there. So it can reduce your FBT substantially. So another one good to consider. This one's for the not-for-profit, so just take a little rest or sip of your coffee if you're for-profit. But those that are salary sacrificing rebatable employers. So we've got a 5,000 cap. Sometimes that 5,000 cap, we could chew into the 30,000 cap for the meal. We might provide a meal card to our staff. Now, over COVID, we wouldn't have been going out to restaurants, so that would have been a waste. But the ATO has considered that if you've acquired takeaway deliveries, normally takeaway delivery doesn't qualify for a meal entertainment. So you can't put it on your meal card. Wouldn't be a valid expense. So what they're saying is that the ATO has made a concession. It's not going to use compliance resources, but from prior to 1 March 2020, if you do delivery or take away from an in-venue dining, so meaning a restaurant that used to be a restaurant, but now is just closed up and is a pop-up, not your milk bar down the road, then effectively you can use that meal card and it counts towards that. So these are some scenarios for you to just take in the scenery. So takeaway delivery meals purchased from a venue that provided, you know, in-house venue like a restaurant, includes purchase of alcohol as well. So yes, that compliance approach is fine, meaning you can use your meal card. But in these instances, you know, where you've got petrol station, you buy something, you know, food and drink, no, coffee purchased at a coffee shop, all those kind of things. So what you think it should be. Again, I'm not going to spend much time on this, but I just thought I'd alert you to it. If you're a big employer that has a lot of staff, JobKeeper is finishing, or has, sorry, I should say it's finished. You may be reskilling or retraining people, but you may not be wanting to retain them. So you're going to make them redundant potentially. Previously, that wasn't allowable, and it was subject to FBT. And what they're saying is from 2nd of October, if you do have any of these types of expenses, so employees who are making employees redundant and or re-employing employees to work in a different role within their business, these kind of expenses from the 2nd of October, they've picked the 2nd of October, they haven't sent out the legislation yet. They're basically saying these costs will not be subject to FBT. So that could be useful to some employers. Jasmine, I'm going to hand over to you.
Thank you, Mariana. So I'm just going to go through employees travelling and how that might be impacted by FBT. Now, we all know FBT is generally only applied to private expenditure of employees. So how does that tie in? Well, that's why when we go through all the different types of travel employees might do, we need to look and determine, okay, is it employee travelling to work or on work? So to start off with, we'll look at the different types of transport or travel expenses that employees might have. There's a long list here, but generally employees travelling from home to work, we know that's personal expenditure. I can't claim my Opal trip to come into work every day. Employees travelling from home to an alternative workplace, so you're going to a client's office, or you're going between 2 different workplaces. So maybe you've got a divisional office, you know, elsewhere, and you have to go in 2 days a week at one location and then at the other location. So these are all different types of travel expenses. There's also, you might be required to travel overnight for a work conference or somewhere interstate to another state office for your business, or you could be going on secondment. When we look at these expenses, generally we're like, well, that seems like it's work related, right? But there is a little bit more to it, and we need to figure out, okay, is the employee traveling to work or on work? And I know I've repeated that before, but what that's really looking at is the travel occurring during work time? Is it because it's under the direction of their employer? Is it fitting in with your employment duties? And is it relevant really to carrying out your work duties? So to help us a bit with this, the ATO has published finalised tax ruling 2021-1, which looks at the income tax deductibility of employee travel expenses. And how FBT comes into this, to put in a very, very quick summary, is if transport and travel related expenses for employees are deductible for tax purposes, they won't be subject to FBT. Now, generally, expenses that, as I mentioned before, expenses that are in relation to employees traveling from home to work, they're not deductible. There might be some exceptions that apply, but I won't go into too much detail at the moment. And just want to stress that we're looking at travel expenses only. We're not looking at accommodation and meals. We'll look at that in a later slide. But in general, if employees are traveling for work-related purposes and it's deductible to the business, they won't be subject to FBT. Now, looking at tax, so there's two more tax rulings, draft rulings, that have been released. One is a practice compliance guideline and the other is a tax ruling 2021-D1. Now, the purposes of these are to help us in determining, well, are employees traveling on work or are they living away from home? Now, the distinction here is traveling on work means, okay, great, your expenses are on work time, they're work related and not subject to FBT. If you're living away from home, that's when FBT comes into it. We will look at, some of you might be familiar with a living away from home allowance, and we will look at this in the next few slides. But at the moment, what the ATO have given us is a rule of thumb. It's a little guide that we can use to figure out if employees are traveling on work. Now, there are a few little requirements that need to be met, but what's new is the 21-day or the 90-day test. And what it says is if your employee is away for 21 days straight or no more than 21 days straight or less than 90 days through the FBT year, they will be considered traveling on work. So just to stress, if you're away less than 21 days straight or during the whole year you haven't been away at a particular location for more than 90 days, you're still considered as traveling on work and all the other conditions listed there are met, you would be considered to be traveling on work and any accommodation and meals expenditure would not be subject to FBT. Now, if those conditions aren't met, so if you're away for say 30 days straight or 100 days during the FBT year, that employee is now going to be considered to be living away from home. And what this means is it opens you up to FBT exposure on any accommodation and meals expenditure that you pay or reimburse them for. Now, it's not all over yet. There is a living away from home allowance, which might be able to help. Now, just generally, some of you might be aware of this, but what a living away from home allowance is as an employer, you might be paying your employee, paying them to compensate, any additional expenses that they might be incurring because they're living away from home as part of their employment duty. So you've sent someone over to Melbourne, to provide a very specific service as part of their employment duties, and you're covering them for some expenses during this time. Now, living away from home allowances are subject to FBT, but there is a concessional treatment available. This is only available for the first 12 months at a particular location. And what happens is basically you can significantly reduce the taxable value of your living away from home allowance, fringe benefit by taking out what's called exempt accommodation and exempt food components. And these are amounts that the ATO publishes each year, what they determine would be a reasonable amount that you would need to pay your employees during that period. So if this is done correctly, you can significantly reduce the FBT exposure on this allowance, but it is a very complicated area, and we would recommend that you get some advice before entering into arrangements, or if you already have entered into such arrangements. I'd just like to stress again that this is only available for the first 12 months someone is at a particular location. Following that, the concessional treatment is not available and the whole amount might be subject to FBT. Now, going through all of those different types of travelling expenses, I thought we would quickly look at some common situations and what they might mean from an income tax and FBT perspective. Okay, so I'll look at about 2 or 3, just in the interest of time. But with employees travelling for work, so say an employer is going up to Brisbane as part of a work conference, they're travelling on work during work hours. This is quite a straightforward one. Their travel and accommodation and meals would be otherwise deductible to them. It would be a work-related expense and it would not be subject to FBT. On the other hand, say an employee is being seconded to Melbourne for 4 months. In this case, they would not be travelling on work anymore because we know they've definitely gone for more than 90 days during the period and 21 days continuous. They would be considered as living away from home. Any expenditure on accommodation and meals would not be otherwise deductible to them. And they wouldn't be travelling on work, so the travel expenses also would be subject to FBT. This is where the living away from home allowance might come in and help out a fair bit. If they're only going, this is their first time there, they've only been there for less than 12 months. So you would need to look into this one a bit more. Another example is employee lives in City A and works in City B by choice. Say you live in Newcastle and you accept a job in, say, Sydney. It's important to note here that this is a personal choice. You live in Newcastle and you've chosen to come and work in Sydney. Any travel expenses that your employer might cover for you, they would not be able to deduct them. And again, they would expose themselves to FBT. And similarly, accommodation and meals expenses would also be subject to FBT. So that wraps up business travel. And I'll just take a quick look at what attracts the ATO's attention. Now, obviously, non-lodgement is a big one. So if you are registered for FBT, you need to get your lodgement obligations met. And whether that means lodging a nil return, if you've got employee contributions that effectively are reducing your liability to nil, you'll still need to lodge that. Or if you can also lodge what's called a notice of non-lodgement, basically letting the ATO know that, hey, we're not required to lodge an FBT return. And why this might be an issue is that when you lodge your company tax return, if you've got employee fringe benefits, you're required to include them in your assessable income. There is a label on the tax return saying fringe benefit employee contributions. So now the ATO might pick that up, look at it and say, hey, well, you've got employee contributions here, there's no FBT return. And that's always a trigger point for them. And that takes me to the next point, which is labels in the FBT return. As some of you might know, in the FBT return, we've got a table where we've got to say, okay, well, this is our starting taxable value of the fringe benefit. This is the amount that it's reduced by, and then you've got the net amount. Now, where you've got reductions, whether that's because the amounts are otherwise deductible or there are some other exemptions or reductions you are applying, you need to make sure, as I mentioned before, that there are declarations that the employees have signed for these and you have them on file. Other things to watch out for is the ATO might pick up your tax return and say, oh, you've got motor vehicle expenses but no FBT, or you've got travel expenses and no FBT. So those are the kind of things that they'll compare your fringe benefits return to your company tax return, and try and tie those up to each other. So there are obviously a couple more there, but I'll just move on in the interest of time and pass back to Mariana.
Oh, thank you, Jasmine. I thought it was questions and answers, but we can go from there. Let's just go to questions and answers first. I think it's probably, they've got questions and answers in chat, so I don't know which one we'll go to. Questions and answers, yeah?
Yeah, I'll start with question and answers, and there are some in the chat which we can look at as well. The first question we've got, Mariana, is how to distinguish type 1 and type 2 benefits. For example, for meal entertainment, which type is it for the restaurant bills that is GST inclusive? But our company didn't claim GST on it when lodging the bags.
I can't remember, is it type 1 or 2, Jasmine? Okay.
So type 1 is where you are entitled to the credit, so that would be type 2,
okay. I'd
say.
Yeah, so there you go, Jasmine's answered that for us. So type 1 is GST inclusive. So if it's got GST, that's your type 1.
Mm-hmm.
but the company didn't claim the GST as lodging BASs, maybe because why wouldn't you claim the GST? Well, okay, because you can't claim the GST because it's a meal entertainment. And the question would be, what method are you using? Are you using the actual method or the 50-50 method? So, you know, if you're, this is why it's important how you do your journals, because if you're using the 50-50 method, you'd have a line for clients and a line for employees, and you'd split the fee accordingly. So because it's all bundled together, right? If you're using 50-50, it doesn't really matter. You put it to one account, and at the end of the year, you divide it by 2, and 50% you claim GST and 50% you don't. So it's not an easy one to answer.
Okay, our next question is, would it be entertainment if it is a dinner hosted for potential donors and employees attend the event as part of their job description?
Ooh. So the portion that's entertainment, the dinner as such, if that's being paid by the employer, that would be, again, depends what method you're using, 50-50 or actual. But say, we're doing actual in this case. The employer portion is non-deductible, you know, no FBT and no GST credits. The employee portion, there can be an exclusion to this. It's quite specific though, where you might be entertainment providers or you do venues, etc. And that's your role and your job, potentially can come excluded. Otherwise, it would be still subject to entertainment. Do you have anything to add on that, Jasmine?
No, I think I agree.
So I think it depends on the facts.
Okay, great. Our next question is, would a staff farewell at the work premises with alcohol be considered entertainment?
Oh, I love that one. Again, it depends what you're using. So if you use 50-50 method, lump it all together, and then you work out 50-50. You don't get minor or in-house. But if you're using the actual method, then you could get an exclusion under in-house fringe benefit. Property fringe benefit, it is specifically that 43. So there is an exclusion if you're using the actual, but not if you're using the 50-50.
Okay, we've got a similar question to that one. I'm not sure if it's the same, but would a staff farewell at the work premises with alcohol during work hours be considered entertainment? And it also mentions it's for tax exempt bodies.
Yeah, that's an interesting one. You probably don't have the minor benefit exemption for exempt bodies. They are quite treated a bit differently. And some meals, if they're not salary package, don't come within FBT either. So because you don't pay tax. But in some cases, they can be included as part of a what is that called? If you're using the 50-50 method, it might be in there included in your tax return. So that's not so easy to answer. I'll probably have to think about that one a bit more. But in general, the not-for-profits are a little bit different. And in some cases, if it's not packaged as such, which wouldn't be in this case, there may not be any FBT on it.
So the next question is, if a staff member stays in the company's property, a one-bedroom apartment inside a holiday house, all the time over the year, including weekends and the Christmas break period, for weekdays, he stays in at night to provide security and help if needed by the holiday customers. She doesn't have any other residence and treats the apartment as her home. Is this an exempt property benefit?
That's an interesting one. So it's a company's property. I think there's a benefit being provided there. It's whether is it in a remote area? Is there a remote area allowance? I'd probably look at. But definitely, you'd probably pay FBT on the market value of the benefit. There wouldn't necessarily be an exemption for that one. We'd have to look into that. Sure. Whoever your tax advisor, that's probably a good question to ask them. Or, contact me separately.
Great. So a few more entertainment ones. Would it be entertainment if it's a dinner hosted for potential donors and employees attend the event as part of their job description?
I think we've done that
for tax exempt bodies.
I've done that one.
We have? Okay.
Yeah.
Okay,
I think, yeah, does the...
Does the existing definition of a commercial parking station include hospitals and shopping centres?
No, currently it doesn't. And that's the whole thing. That ruling is trying to bring those in. The reason being is that hospitals and shopping centres charge penalty rates. So currently we don't. If all you have around you is a hospital and shopping centres, wouldn't include that. But this ruling would say from 1 April 2022, if that does come to fruition, by the way, that they would be included. And so potentially then you'd have to look to see whether the exemption would apply.
Are novated leases considered FBT for tax exempt bodies as well?
Well, novated leases as such are considered car fringe benefits, and yes, would be under the FBT regime. It doesn't matter whether you're tax exempt or not. The only thing is that if you're providing a novated lease, the expense payment, if you like, could form part of a cap. So you might have that 14,000 or the 15,900, depending whether you've got GST or not, as part of the cap. So you may not have to pay FBT because of that exemption. Otherwise, yes, they normally would be FBT-able.
Great. Okay, next question. You invite a customer for a meeting to discuss their business. This meeting is happening at a restaurant. There are staff members who have travelled from interstate as well. Would the meals cost be exempt as minor incidental expenses for all staff, including employees from the state? Including home employees.
Yeah, so that's got a... There's a few things in that question. Shamil, thank you for that. But effectively, the employees travelling, if they are travelling for work, that may be just, you know, business expense as such, the food and drink. Depends who's paying for it as well. But in some cases, if they're paying for their own expenditure or they're going to get reimbursed by their employer, they're probably just travelling. So deductible. If it's you and a customer travelling, then if you're picking up the whole bill, it depends again whether you're paying the 50-50 method or the actual method. So you really have to look at what method you're using. And if you're using the actual method, I would say the customer is no FBT, not deductible, entertainment. It's at a restaurant. The staff members that are your employees, again, that would be FBT-able and deductible. And the staff members travelling, I'd probably get them to reimburse so you don't have an FBT issue and they're just travelling, so it'd be deductible to them as the company.
So if an employee works late or needs to come into work early, would the taxi expense be subject to FBT?
You could look at there is an FBT exemption for taxi travel. It has a certain criteria. I can't remember all the criteria. So they're doing it all the time. They may not come within it. Could you consider it minor and infrequent? Question is it minor and infrequent? Are you doing it always often? Because home to work is usually a private expenditure. The fact that they're using the travel. So if you give an employee needs to come in early occasionally, it may not be frequent enough for them for FBT, and it might be a minor benefit.